All right, so welcome back to another YouTube video of the series that we're doing over here. You guys already know how this is moving. We did this trade together yesterday, or whenever you watched the video. It was literally the video before it about this trade, and that would be the London session. Now we're going to see how the New York presents itself after we've tapped into the demand. To give you some preview or some context, we want to always think about how the market moves, and it essentially is, a higher low that creates a higher high and then trends downwards. If we can find these sell positions all the way to our extreme zone, it would be beneficial for us to then either sell to it or buy from it to continue the trade. Now, again, to give you some context about how the market moves and just for you to understand how it really is, we have a low that creates a high. And then once we are at that high and we start seeing, seller control, we know that this seller control is all the way down to this zone over here. But once that zone is tapped into, that means, for example, if we've had previous zones that, let's say this is the higher high, and again, we continue lower, let's say we have buildup, and then this, let's say, for example, is a supply zone. This supply zone would only be valid until it creates a low. Once it creates a low or it taps into a valid higher time frame demand zone, this becomes irrelevant. So when price comes to revisit, most of the times you're looking to sell from this zone, but what happens is you see a break of structure, and then this becomes a zone. Once you see a retest, you're still thinking that this is the inducement and you still want to go lower, but more stop losses over here, and then you get targeted out. So you really have to understand the purpose of the zones, and when the purpose is being served, you want to start looking away from these zones. But again, to just kind of give a clear picture about what could be going on, normally what we have in front of us here is, a demand zone that created a high. And then once we have that retracement going on, we want to look for more confirmations. And it just happened that the London session opens over here, following and trading the back of the previous inducements over here. If we zoom in, we could see more buildups, takeouts continuing to the downside, more buildups, sweeps, and then we're just seeing more and more seller control. Obviously, these ones are then going to be targeted when the higher time frame demand zone over here gets tapped into, which we can see over here. So this was our target, and it's crucial that you understand that once our target is met, it's very important that the exit is very clear. You need to know where you're exiting in the market and where you're entering, because these two things are very, very important for you to have a successful trade. And if you have the money floating while you're in a trade, I basically advise you that whatever you're doing, we don't want to turn a winning trade into a losing trade, or we want to make sure that we're not butchering our risk to reward based off chasing a trade or not exiting or becoming greedy. Because, you could find a sell position over here, but once that demand zone is tapped into, it could be revisited for sure. You could have more extra profits over here, or it could just, tap into it and then just shoot higher, depending on what the volatility is or where price is coming towards. But what we can see here is, price coming back to close pending orders at the lowest imbalance at that zone. And this just makes it so much more clearer in a way for us to understand that, hey, you know what? This zone has served its purpose. Sellers no longer need to have control, and we are not in the New York session yet. So we are now waiting for the New York session to kind of show its cards. And if the New York session can show its cards in a way where, okay, we understand that buyers are now stepping into the market, no more lower lows are being created, and we have switched to higher highs being created, we want to make sure that we execute that in a very clean structure manner. But market structure on its own won't make any sense if you're not pairing it with, the inducements, being in the session, just to make sure we move with that momentum volatility that happens when our window opens. So you just entering a buy because this happened and you're not in the London session and also not in the New York session, especially this creates more volatility in the market, and it's like basically an early buyer trap. So you be kind of happy that you're entering this trade without any confirmation, but more times than not, you feel like you're stopped out and then price goes to your take profit. So just reading this, we want to understand that, there's a higher low that created a higher high, and then we have a retracement, and then we want to create a new high. Now, what's important is if we kind of make sure that we know that market moves higher high, higher low, higher high, this point is basically this point is basically this point, and this point over here is basically this point over here. So if we know where we are in the market, then we know that we can target a new high. But this could take, 2-3 sessions but at least we know what the model is presenting to us. And this is how intraday trading gives you the leverage to make money and just leave and just enjoy the rest of your day or whatever it is that you do. So if we're able to understand that, then you're okay to know that now the demand zone has been tapped into. We are now waiting for our New York session to play out. So until that, that gray box shows again, we are just reading what price is telling us. And if price is basically telling us that, I'll just fast forward a bit so you see. We'll just fast forward until we see that gray box open up. Let's see. Boom, 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 boom. Hang in there. Okay. Now we have that gray box open up. Great. So demand zone gets tapped into. Over here, we're not interested in the session, but we can clearly see that, lower lows, lower highs, lower lows, lower highs being created up until the demand zone has been met. Then we can see that there's a strong push from the buyers. We see that there's, buyers are starting to take control. We see that as soon as the gray box opened, which means our window has opened, this is the second hour of the New York session, we know that it could show us some cards. And these cards would be like, let's say this created the high, then got swept. So we know we have a buildup and a sweep at the session open. We want to see where our targets could be. So now I'm waiting for the same thing that we waited for over here. So let's see a two-leg that shows us that buyers are now in control. We start to see that first leg. We want to see a second one, and then we want to see our tracement to then go higher. Is the market going to do that? We're going to see, but now we understand why we can sell at London, buy at New York, make profit at both, or, sell at London, just rest for the day. But as long as you understand market structure and where your targets are, it's going to become so much more, interesting for you, because now you know where you're going with price, and you know that, if you're selling over here, you know that there's no need for you to sell after that demand zone because it's a higher low that created a higher high. And so when it's retested, it's now also going to go ahead and create a higher high. So if I just follow up with price, I'm waiting to see some entries. I'm seeing that, previously we had build up, we have a sweep, and we have a new high. So I want to validate this inducement. Should price go all the way down? Not really. As long as we have that, more inducements happening, we could trade off the back of these inducements, but knowing that we don't want to have a huge stop loss, for example, that goes all the way down here if your entry is all the way up here. It just shows that you don't want to be precise with price, and it's just going to give you a lot of, fogginess up there, and we just need the mental real estate to be kind of clear in order for us to continue forward. So I see price opening up. I'm interested in seeing how these candles are going to form now. And I'm just going to fast forward a bit. I'll see, okay, great. We have a one leg, we have a two leg. And now I'm interested in entering somewhere over here. So I see that price is giving me that retracement. Great. I want to enter somewhere. I want to make sure that we enter at the 50% to be safe. We'll do something like this. And we'll continue. We see that price taps into that 50. Let's say you've already had your position over here. You can have, your stop loss under this one over here. And what are we targeting now? Well, you can see previous liquidity pools, and it could be, a previous structure over here. We want to aim for a 1 to 3 at least, so you can extend that over here. And then you look to the left and you see there's a previous session high, which could also be, a liquidity pool, because more people could be holding over here. And if they didn't leave, this is what brings me to what I was talking about, that if you didn't leave over here, it's going to be expensive for you. So we have that locked and loaded. We are now just simply waiting for more confirmations. We want to see how price is going to react based off, following buyers entering the market, coming back down, closing previous pending orders. We know that, it's crucial that we're just following this one leg over here and a second leg over here, a retracement back into the 50%. So we're not basically buying at an expensive price, but we also don't want to miss the trade because we're just keen on just entering over here. And it's just like a couple pips. You can see that the entire basically fib retracement that I have, and again, that's only for me to see how much of a retracement price is having. It's not like I'm following the fib retracement, but there's basically a 50%, so it's good. I also want to check the entire thing, and it's basically 7 pips for the entire push. So if I could just, make sure I have these 3 pips for me to bag as profits, I'm good. And then, you target your 1 to 3. Eventually, price could end up closing over there. It could end up sinking, but based on the probability, we just want to make sure that price is giving us what we normally follow. Okay, so I'll fast forward with price, and we'll see that there's more. Okay, So price starts shooting higher, and then you see that the first high over here gets taken out, which was a previous one, and then basically this took out the previous session high. Now, again, if we continue with this, you start seeing that price is retracing. We see that we have imbalances over here, so price could end up closing over here. It's your decision if you want to target the entire pools, but for me, I'd say follow the 1 to 3 volume, as much as you can. Build good buffers, have some good profits with you, and then you can extend it all the way to the Asia. And if you have kind of the courage to hold it or not, but for me, I'd rather close early, bag that 1 to 3 volume, and just enjoy it. So I'll fast forward and we'll see if this gets taken out. Okay, so we didn't have stop loss yet, which is not that bad. And then it continues all the way to take the Asia high. So I'm not sure if you want to be stuck in all this drawdown. I'd rather just, take the session high. It just seems to be that after the 1 to 3 gets hit, if you want to still continue it and you're fine. For example, if you took this trade over here, if you took this one over here, then you have no issue targeting the 1 to 3. And if you're just risking from the profits, you can target a session high. It just makes sense, an extra 1%, target a Frankfurt high, you can target an Asia high. But if you want to go through all that drawdown, especially when you have imbalance like this, we still see that there's, this one over here, and then it gets swept and a push higher. So we're seeing that buyers are getting induced. Again, we want to look for the entire thing, and we know that, price might have room all the way up here, but this goes until the next London session or the New York session. That being said, enjoy. See you on the next one.